Good morning. This presentation would explain the importance of detarification of the general insurance industry, what was it all about, and how it affected the Indian general insurance sector. First, let us understand what is a tariff. If we can see here, tariffs are fixed price list that determine the premium rates which the insurance companies can charge consumers for insurance products sold by them. So, just like any other general tariff in any industry, in an insurance sector as well, there was a tariff which was issued by the Tariff Advisory Committee, and it was the base premium rates on which the insurance companies could charge premiums with the from the insureds. The insurance sector was controlled by these tariff rates pre 2007. So we can say that uh, prior to 2007, all the general insurance premium rates were controlled by the TAC in the form of tariffs. This TAC was formed under the Section 64U of the Insurance Act 1938. So what happened was after 1999, when the sector was open for private players, so it was very imperative that the insurance industry had to be de-tariffed in the general insurance sector to have more competitive pricing and in consumer interest. Now, these are the phases of detarification. We can say there was a preliminary phase which started from 2004, wherein marine cargo and marine hull were slowly detariffed in 2004 and 2006, respectively. And finally, in 2007, the entire general insurance business was detariffed except the motor third party business, which is still today handled by tariffs, and the premium rates are all uh, finalized on the base of basic tariffs given by IRDA. Phase 2 of this de-tariffication started from 2009. So as you can see in this slide, prior to 2009, when the de-tariffication started in 2007, we had just premium restrictions waived off, that is relaxed. But after 2009, there were also relaxations made in policy terms and conditions, advantages. Like for example, here we have mentioned deductible values and policy add-on covers. All these things could also be altered by insurance companies according to their own understanding and case to case basis after 2009. Now next, let us talk what are the advantages of de-tariffing. Now, since we can say that de-tariffing led to premium rates being decided by the insurance company itself. So what was happening, companies were now they had to give competitive rates in the market so that people could opt to their insurance company for business. For that reason, they had to reduce their additional or unneeded expenses. So this was an advantage for the companies that they could were in a proactive mode to reduce their expenses as far as possible. Next, we can say the rural sector was also given a boost after de-tariffing because now the prices were quite competitive. The third advantage here states that see, what was happening was these tariff rates were only the minimum rates that could be charged by the companies, and the higher limit or the upper limit of the rates could be set by the insurance companies. So because of this, there were a lot of malpractices happening, and very high premium rates were charged from the insured, which were falling in a high risk criteria or a high risk category. So this malpractice stopped after de-tariffing because now we had to offer competitive rates. So higher rates could mean loss of business. Next advantage we can see here that insurers were playing the role of underwriters now as well. So what is happening, since you are setting your own rates, you have to set in an internal underwriting team which would look at all the factors and keep the best rate possible, which could also help them to bring in more business, but at the same time they are not making underwriting losses to the company. Next advantage here says that consumers started to indulge in loss mitigation after de-tariffing. Now what is happening after de-tariffing? A lower risk is giving a lower premium, a higher risk is giving a higher premium. So if the consumer itself is very much aware that if he or she is reducing or mitigating the risk he or she has, the premium would also come down. So, for example, if I am taking a fire policy for my building, so I know that if I install a water sprinkler, a fire extinguisher, or I conduct regular drills in my building for a fire breakage, so that would lead to a lower premium charged by the insurance company. Last point says that there was elimination of cross subsidization leading to independent pricing for each class. So suppose what is cross subsidization? I have a health insurance line under me and I have a fire insurance line under me. So if I am making losses under a fire insurance but I am making very much profit in under a health insurance, so I am cross subsidizing. So after detarification, independent pricing mechanism for each line of business came into place and cross subsidization was minimized. So these were the advantages. The last slide here mentions the disadvantages, or we can say the threats of detariffing. The first point here states that obviously if you are forming an internal tariff for your organization, it would lead to a lot of time, it would lead a lot of it would cause a lot of expenses. So obviously it was very difficult to prepare internal tariff for each line of business. This was a challenge for the companies. Then obviously, yes, we had very intense competition, so there was a certain loss of revenue. Third would be, yes, a solvency margin, and was one very important aspect which was effective. Now if we say that what is now in respect of solvency margin, see, when we are ensuring aggressive rate wars among the players, that would possibly lead to unhealthy competition in the marketplace, which would obviously threaten or reduce the solvency margin of some of the insurers, particularly the private companies. The regulator, who cannot afford this to happen under any circumstances, might be forced to come out with more stringent measures against the defaulters. Now, this would indirectly influence the operating results of the free market regime. So, because of detariffing, there was a lot of pressure on the solvency margins of the companies. We have discussed the concept of solvency margin already in the regular classes. Next, we have file and use. Now, what is happening? File and use is a common terminology or a phrase which is used when we are before launching any product commercially in the market. We first, as an insurer, we have to file it with the IRDA, and they will approve all the terms and conditions and premium rates, and then only we can use that product. So obviously, timely compliance is now very much important, because before your competitor does it, you have to file that product. So this is one more disadvantage or a threat, you can say, wherein the people have to, the companies have to take care that they're doing everything timely. Then last we have obviously we have reinsurance arrangement. Everybody knows that in the industry. So when the rating comes under pressure under a domestic market, the international rating is also equally affected. So we have pressures in the reinsurance premiums as well. So now this presentation made it clear as to what are the advantages and disadvantages of detariffing. And then the next portion we would cover risk appraisal in Unit